Hi guys, welcome to Street Trading Buddies. This is the London session. Wanted to give you a quick update on how do you actually trade reversals and ensure that you don't get stopped out. Uh, Remember to like, follow, subscribe please, and you have my links on GetLeveraged and FIDIAS in the description. Here we go. So if let's say you do have market there, go to the 1 hour and then draw swing high to swing low there. Once you do that, you can clearly see that liquidity is taken in here, which is a good sign. And also you do have relative equalize in here, which is also a good sign. Now, I want to bring your attention back to this area. So once the liquidity is taken, okay, this is the time when liquidity is taken, but we do not act now. We need to wait for the market to show that it wants to push up, good, and then form a fair value gap. Good, the fair value gap is actually formed. Now, this is a time where you need to exhibit a lot of patience, because see how it reacts to this particular fair value gap, okay? And see, at this level, you can clearly understand that the market is trying to push back up. People might not really want to trade from here. You might want to wait until it even gets to this level, but there's another way. You can go back to your 5 minutes, because that is your time where you would take your setup and you do the same thing. It's a rinse and repeat thing where you draw your fibs. Okay, so because this gives you the range, you can clearly see that it aligns with the 0.25. Now this fair value gap got inverted in here, so and now, which means we need to see whether the market does something crazy in here at 0.25. So here you put your order in here, which should be good enough, and you take it back to the significant area where you think the market would gravitate to. So that would be this area, right? Or if you don't want to, then maybe you can go down a little bit more or a little higher. So it could even go back to this area, because this would be your relative equal highs. Okay, now let's look into the 5 minutes just to see where it tapped you. And you can clearly see that the market actually didn't tap you in here, which is okay. But this is the area when the time when it tapped you. Now go back to the 1 hour, and on the 1 hour you can clearly see what's happening. On the 1 hour it just takes off. Okay, so this is where the initial targets get hit. So you could take some out in here if you want to, here or here, then let the market go back, and once it goes back up, good, you can clearly see, you can keep rinsing and repeating the same process there and wait for the market to hit your TP, right? So this is where we are currently, and I'm also in a position there which I wanted to show you. So it's at $227, but previously it peaked up to almost like $300, I think so. So I'm not really worried if it takes me out. Yes, it takes me out for a break even, that's fine, but I do have my take profit in here at 6%. So it depends on how much do you want to risk and how much do you want to, but again, this is the template, and if you can follow this, what happens is it reduces a lot of heartaches for you, right? So that's a quick tip there, and I hope that you take a lot of value in this particular walkthrough. Cheers then. Thanks. See you.